Students, today we are discussing about various terms which are applicable on a banking company. Yesterday we have discussed the balance sheet and profit and loss account in two videos. Today we are discussing about the various terms which we have used in balance sheet and profit and loss account in detail. So the first is circular notes. Circular notes refers to the डिमांड ड्राफ्ट्स. डिमांड ड्राफ्ट्स जैसे आपने सुना होगा कि हम बैंक में जाते हैं, किसी के नाम का ड्राफ्ट बनवा लेते हैं. दैट इज़ ऑल्सो नोन एज बैंकर्स चेक, और that may be known as टेलीग्राफिक ट्रांसफ़र्स. टेलीग्राफिक ट्रांसफ़र्स, जैसे मैं किसी को कोई पैसा ट्रांसफ़र करना चाहता हूँ, तो यहाँ पे हमारे पास बेसिकली देर आर टू ऑप्शंस. वन इज़ RTGS एंड अनदर इज़ NEFT. Nowadays we are applicable the third one also, IMPS. If we want to transfer the money instantly, then we have to pay some charges, that is under IMPS. When we are talking about RTGS, that is more than 2 lakh rupees, either in nationally or internationally. If we want to transfer below 2 lakh rupees, then we have to send a fund transfer through NEFT. NEFT is Nationally Electronic Fund Transfer. RTGS stands for Real Time Gross Settlement. So basically, there are three schemes under telegraphic transfers. Then, bank charges from the customers for collection of amount of bank draft. There are some bank charges we have to pay while doing a NEFT, while doing a RTGS, while doing a IMPS. Nowadays, there are no charges for NEFT, but there are charges for RTGS and IMPS. So that is the income for the that is the income for the banker. The demand draft is drawn on its on appropriate branch by bank, but if the bank issuing the demand draft on the other branch of any other bank, it can be done only through agreement between the banks. आई थिंक दैट इज़ क्लियर फ्रॉम द लाइन. अगर मैं एक बैंक से दूसरे बैंक में पैसा ट्रांसफ़र कर रहा हूँ तो उनमें एग्रीमेंट होना ज़रूरी है. थ्रू टेलीग्राफिक ट्रांसमिशन the bank transforms the relevant branch telegraphically to the credit the requisite amount to the payee's account. It is the fastest way to transmission of money. Then these types of drafts are there. Telegraphic transfer, traveler check, etc. are shown in Schedule 5, and other liabilities and provisions are included in the items of bills payable. Then we will move to the other part, that is contingent liability. I have already discussed in the last lecture in very detail. Contingent liabilities are those liabilities the occurrence of which is uncertain. It may or may not happen. These are the types of contingent liabilities. You can study these 5 types. Contingent liabilities are not actual liabilities, and these are shown as a footnote under Schedule 12. Yesterday we have discussed in the balance sheet. Contingent liabilities and bills for collection are shown as a footnote under Schedule 12. These are the 5 types you can study from here. The next one is money at call and short notice. It is the money lent for very short period of time, generally varying from 1 to 14 days. Yesterday I have discussed that money and call and short notice is basically for the 14 days or less than 14 days. That is very short term advance provided by the bank. Such advances are usually made to the other banks and financial institutions only, just to meet their requirements. Money at call ensures liquidity. The amount invested and the interest earned depend upon the conditions prevailing in the money market. In the interbank market, it enables bank to make adjustment according to the liquidity adjustment. It may be shown as schedule number 7 on the asset side of the bank's balance sheet under the head balance with the banks and money at call and short notice. Then next is floating charge. Floating charges are basically charges which are to be, you can say, incurred for issue of some securities or properties. A floating charge on undertaking or any property of a banking company can be created only if RBI certify in writing that is determinantal to the interest of depositors. Inter-office adjustments. Inter-office adjustments means when we are transferring from one office to another office. So there are some adjustments like the bank office, the inter-office adjustment balance. If in debt should be shown under under this head. Only net position of inter-office accounts, inland means domestic as well as foreign, should be shown here. For arriving at the net balance of net office inter office adjustment account, all connected inter office accounts should be aggregated, and the net balance, if in debit only, debit should be shown, representing mostly items in transit and unadjusted items. In other words, these are the adjustments made by the head office, giving aggregate effect of balance outstanding in the books of all the branches. So basically here we are showing you can say branch adjustments and inter office adjustments. Sometime we are taking money from you can say other branch, and sometime we are transferring money to the other branch. We have to make a net adjustment. For example, if I have to pay 10,000 rupees, I have paid rupees 10,000 to other branch, and I have received rupees 15,000 from the same branch. Then I have to pay rupees 5,000 rupees as a payable. So that is inter office adjustment. Next is pledge. We have already studied in mercantile law in the last semester. Pledge is basically on movable items. Pledge is kind of, अगर मैं हिंदी में बात करूँ तो इसको बोलते हैं गिरवी रखना. Pledge is a term when the bank takes actual possession of the movable securities such as goods, certificates, gold, etc. against the loan granted. जैसे हमने सुना हुआ है कि जैसे बहुत सारे आजकल आपने NBFCs सुने होंगे. NBFCs means non banking financial corporations such as Muthoot Finance, such as India Infoline Limited, Finance Limited. So जो या Muthoot FinCorp, ये आपने देखा होगा बेसिकली ये गोल्ड लोन प्रोवाइड करते हैं एंड दे विल टेक गोल्ड एज अ सिक्योरिटी. सो इसी तरह से कोई भी ऐसे सर्टिफिकेट्स हैं, चाहे जैसे NSCs हैं, NSC मतलब नेशनल सेविंग सर्टिफिकेट्स, इसके अगेंस्ट मैंने कोई लोन लिया हुआ है तो उसको हम बोलेंगे प्लेज. सो बैंक कीप द सिक्योरिटी विद इट एंड प्रोवाइड यू अ लोन, एंड बैंक विल रिटर्न द सिक्योरिटीज टू द बोरोअर or that is pledger at the time of repayment of whole payment of the loan. In case pledger become unable to pay back, then the bank has a right to sell the security and recover the loan amount along with the interest accrued thereon. Next is hypothecation. Hypothecation is another type of pledge or girvi rakhna. Hypothecation is the term used when the actual possession of the asset remains with the borrower. जैसे कि हम घर पे लोन ले लेते हैं, हाउसिंग लोन इज़ बेसिकली अ हाइपोथिकेशन. सो वहाँ पे घर हमारे पास रहता है पर उसके पेपर जो होते हैं, सिक्योरिटीज जो होती हैं, वो हम बैंक के पास रख देते हैं. तो इसमें चीज़ मेरे पास रहेगी और लोन चलता रहेगा. फॉर एग्जाम्पल, इफ़ आई हैव टेकन अ लोन अगेंस्ट वॉशिंग मशीन, or we can say I bought a washing machine against a loan, then washing machine I have used and I have to pay a EMI for the loan. So that is known as hypothecation. Borrower has a right to use the asset. Hypothecation is charge against loan for movable assets like car, bus, any kind of vehicle loan. Here the assets remain with the borrower and asset is hypothecated to the bank for the loan granted. In case borrower becomes unable to repay the loan, the banker has a right to resell the asset, and asset hypothecated and recovers the total loan amount during the loan period. Then next term again, that is a similar term, mortgage. Mortgage is a term used when the borrower has actual possession of the asset and for which you have granted a loan. If I was wrong in the last point, hypothecation is basically a term where we are using the asset but certificate had not been deposited with the bank. Uh, Here, like for example, if I have taken a car loan, I just got NOC against that car loan when I have paid the loan. But in case of housing loan, I have to submit the registry to the bank and I have to take the loan. Here we are using the both the terms of pledge as well as hypothecation. There's a combination of both that is known as mortgage, where we are using a house during we are paying a loan, but here we have to submit the registry with the bank. So here basically mortgage is a term used when borrower have actual possession of the asset for which you are granted loan, such as housing loan, or against which you are granted loan, uh, like house mortgaged. Mortgage is are the generally immovable assets which are permanently attached with the earth surface like house, land, factory, etc. In case borrower is unable to repay the loan, the bank has a right to seize that security or sell that mortgage asset to recover the amount of loan along with the interest. Next is lien. Again, that is a similar type of pledge. Lien is almost similar to the pledge. The only difference between both is that in case of lien, uh, the lender, that is bank, can only detain the asset pledged until the borrower repay the loan, but bank has no right to resell unless declared in the lien contract. In pledge, we can banker can realize the amount by, you can say, selling the asset, but in this case, they do not have a right to resell the asset to recover the amount of loan unless otherwise mentioned in a lien contract. So there are some provisions regarding bad debts and provision for bad debts. Entries are to be passed of writing bad debts and for making a provisions for doubtful debts in the books of bank. Basically here the bad debts, when we are talking about when we are paying a loan, when we are issuing a loan to the customers and they are not repaying the loan. So in that case, that are also considered as bad debts, or we can say non-performing assets. However, these entries should be reflected in the final accounts of the bank become because it may be a damage to the reputation of the bank and confidence of the public may be lost. The banking regulation allows bank not to disclose the amount of bad debts written off and provision for bad debts. So the amount of provision for bad debts is merged with the provisions and contingencies while debiting the profit and loss account. The said amount is deducted from the advances shown in the balance sheet. It is necessary for the bank to disclose the existence of provision in the statement of accounting policy. The next is interest on doubtful debts. When the debts are considered to be doubtful at the end of the year, then point arises that whether the interest on debt should be credited to the interest account or not. Such interest should be credited to the interest suspense account because realization of this interest is considered doubtful. So the entry should be made as loan account debit to interest suspense account with the total interest due. When some portion of the interest is realized in the next year and some is considered as bad, then it may be shown as interest suspense account with the total interest amount to interest, that is interest realized as a income. We know that as per the nominal account we are creating the income to loan interest becoming bad. So loans, which is a major part of income for the bank. A loan is an advance of money made with or without security. A certain amount is advanced for stipulated means restricted period. Stipulated period at an agreed rate of interest in a loan account. The rate of interest differs according to the type of loan, like housing loan, vehicle loan, education loan, that may be vary as per the nature of the loan. Eligibility of the loan depends upon the various factors like age of the applicant, income tax return of the applicant, residential status of the agreement, uh, previous loan track record that can be checked through CIBIL report. Next is cash credit. It is an arrangement made between the bank and its customers so that the bank allows the borrower to borrow money up to the certain limit. It is not also always necessary that the money should immediately be withdrawn. It is usually sanctioned, or sanctioned means approved, on hypothecation. You can correct the spellings of hypothecation or pledge of stock. Most of the business houses prefer to use cash credit than loans, as although the rate of interest is higher in case of cash credit, yes, yet the same is most convenient to them, as here current asset is hypothecated, that is stock. Next is overdraft, that is again a most important term. If the customer requires the funds on a short term period, for a short term period, and he has a current account in the bank, then the bank provides them a facility of overdue. Overdue means, for example, if I have a fund of rupees 10,000, I withdraw 12,000 rupees, then 2,000 rupees is overdraft. So I will read again. Bank provides facility to overdue from his current account with or within a certain limit fixed by the banking authorities. The rate of interest is generally higher than the rate of interest of cash credit. It is advantageous on the behalf of the customer since he is to pay interest only on the amount overdrawn, that is amount that he has already been taken. If I'm talking about cash credit is basically given to the businessman or agriculturist, or we can say farmer. But overdraft facility is basically given on the current account when we are withdrawing. For example, if I've withdrawn rupees 12,000 against 10,000 rupees, then 2,000 rupees I have to pay interest, more interest. Here, till the time when I am not clearing the principal amount, that is 2,000 rupees, then I have to pay interest again and again. So bills payable, that is the next term. These include unpaid bank overdrafts, telegraphic transfers, circular notes, or cash orders. We have already studied in the first part circular notes. In order to remit money from one place to another by the customer, service rendered by the bank in this respect is to grant bank drafts and telegraphic transfers against a nominal charge. These drafts or telegraphic transfers, etc., are paid to the holders by issuing bank's branch, who reimburse the money. Naturally, any such draft issued by the bank but which remains unpaid at the date of balance sheet is treated as a liability of issuing bank. The most important topic, that is bills for collection, that we have considered in the balance sheet under schedule number 12. These includes drafts and hundis. Hundis are basically used by the shahukars. Hundis drawn by the creditor on his debtor, and same is presented with the bank for collection against documents already attached. Bills, basically we have studied one concept of bill of exchange. Bill of exchange, for example, if I have went to the shop for buying a clothes, and I do not have a cash, I do not have a credit card or debit card. So I will request the shopkeeper that please give me a credit. Then he will ask for some bill. Then I will issue a check of some post dated means after date. For example, uh, I have purchased the goods, I have purchased the clothes on say 1st of April, and I have issued a check of 10th of April. Then he will move to the bank on 10th of April for withdrawing that check. So that is known as bills for collection, that are also known as hundis. Uh, these are generally numbered by the bank, and bills for collection register is maintained by the bank, and whole treated information about them is recorded. Before collection for the bills, these bills are not recorded in any other account. So after collection, the journal entry will be cash account debit, to customer, to commission account. So basically, if I'm talking about cash is debited with the full amount. Customer will get a balancing figure. For example, if I have issued a check of rupees 5,000 rupees, and when I go to the bank for discounting that bill, the bank will give me 4950. Then 50 rupees is charged as commission by the bank. So I will uh, write into the cash account 5,000, to customer rupees 4950, to commission rupees 50. So these item will appear on the balance sheet, in the balance sheet, as on the liability side bill for collection, being bill received as a contra as per the contra entry, and on the asset side bill receivable being a bill for collection as per contra entry. So will record on both the sides of the balance sheet, so it should be recorded as a contra entry. Then acceptance, endorsements, and other obligations. It is a liability of the bank in respect of bills accepted or endorsement on the behalf of its customers. A security is usually required for this purpose, and a commission is charged by the bank. The customers are liable to pay to the bank the full payment of the bills plus any loss or expense that may be incurred. These items will appear on the balance sheet as, on the liability side, acceptance, endorsement, and other obligation as per contra, and on asset side, consequent uh, liability for acceptance, endorsements, and other as per obligation as per contra entry. Again, that should be recorded on both the sides of balance sheet. So that is as per contra entry. So these are the terms can be used in balance sheet or profit and loss account. So you have to study these terms very carefully. Then we will move towards next topic, that is known as non-performing assets. That is a wider concept. So we'll move to that topic. Thank you very much. If you have any query, then you can text me. Thank you for listening.